Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, November the 1st. The year's 2020. Let's talk trading. Weekly open and gap, and the monthly open. And for those of you just tuning in, these videos are for educational purpose only. Your results may differ from mine. So let's take a look here, and we can see some of these gaps have filled, but the pound hasn't filled. 22 pip gap down. Now, since we're talking about the weekly open and the monthly open, there's something to note, and that is price is going to have to range away from the monthly open and the weekly open. It's either going to go up from the open or it's going to go down from the open. And maybe some point later in the week and or month, it's going to cross over that open and go the other way. And so the first few days of the month, you might want to trade away from the open, because at the end of the month, if you catch one of those, you could be up hundreds of pips. When you look at the monthly range, we're talking hundreds of pips, and the range from the high minus the open and the open minus the low. When you add those two together, you get the same number, high minus the low. But since we're trading away from the open, we do high minus open and open minus low. Now, if we were trading the rat zone, we'd be doing high minus close because we'd be coming off of the high, and we'd be doing close minus low because we'd be coming off of the low. But once again, the first couple of days of the month, you want to look for price to move away from the open and maybe take those crisscrosses, and hopefully you'll wind up on the profitable side of a long run. And Friday we had an inside bar. So now we have a break here at to the high side at 129.87 and the low side 128. Let's call it 98. You can see here we've got a few days of inside bar, but the weeks we have a few more, but the month we have a bunch inside bars breaks. And we're speaking about the range so far today, not much of a range. And here we have that buy zone once again. We gap down, pivots up, so we'd be looking to go long. There was a long trigger here for a profit, long trigger here, which would have been another profitable trade. Didn't quite hit the pivot, but if you were on those trades, there you go. And then once again, last week, I think I showed a screen on the price travel analyzer showing how many times, if the price was above the well, let's see, price opened above the previous middle, and then it would hit the pivot, and then if it opened below the previous middle and hit the pivot, well, you can see I do believe price opened below, so if you were using that trade, you wouldn't have had a trade. But if you just took the standard buy zone to pivot here, there was a chance to take profit. And you can see here, you don't want to give all that profit back. So you take it when you can. Speaking of the rat zone too, right now the range is too low, so there's no rat trading at the moment. So once again, we're too close to the daily, monthly, weekly open. And as you can see, the price is moving away from that open. Weekly pivot 1.29, call it 67. Look for price to hit that. And the monthly pivot 1.2979. look for price to hit that before the end of the month. But as you can see, we're moving away from those pivots. So you'd want to wait for price to get above the open, or you might want to, if you see a candle that starts to head back towards the open and towards that pivot, you might want to jump in those trades thinking, the thought being that it's going to go back to the pivot. You just don't know when. Here we see, so last month we didn't have any missed pivots. October we only had one on the weekly. In September, none in August, and one in July. But for the first 6 months of the year, no missed pivots. Now if we switch back to the daily, we missed that pivot here, but no missed pivots in October. In and out of the wick zone right here. So you see price started in, left it, came back in, left it, it's come back in. So long trigger 29.23, call it 24, and with the short at 128.98. And here, looking at the various ranges, I think if I switch the time frame, these switch, yes. So you can see the monthly ranges right here. So you can have high minus previous high. So you can see what happens if there is a breakout. So here we had one of 87 pips. Here 226, here 357. And here previous low minus the low, once again, it would be breaking out. So here we had a 306 pip breakout. And trading a monthly rat, high minus close, you can see last month was worth 235, and the close minus low was worth 122. And that gives us that 357 number. And you can do the same thing for the week. You can see here where we're looking at the previous week's high and low, looking for breakouts. So there was no breakout of the let's see. Yeah, there was a breakout of last week's low, but none on the high side, but not much of a breakout. Sometimes you get big breaks, sometimes you don't. And on a simple trading chart, you can see price is just all red here. So it looks like those who went short are profiting at the moment. And on the simple price action trading screen, trading with the H1 candle color proved to be profitable the past hour, this hour. Just a simple trade. So simple, but the thing about it is that's so deceptive is that you are going to get in your own way. You're going to be the impediment to your profit when you trade this method. You know, the Walmart lines here. Because what you have to do is you have to employ your money management and risk management. And you also have to employ your money management, the profit side. And you have to also apply your brain management. I mean, this is a statistical trade. We've talked about it many, many times. and because price is going to range, and depending on the hour of the day, it'll probably range even more. Now, usually these hours don't trade, especially on a Sunday, just not trading. But those of you who live in those parts of the world or who like to trade those hours, you can see it's still profitable. It might not be as profitable, but there's still, 4 or 5 pips sometimes to be had taking those trades. So, for example, here, if you took this trade, you probably didn't stop out. You got in, price pulled back, gave you another opportunity here, and you probably picked up 5 or more pips. And that's what we're looking for. We're looking just to stack up the pips, 2, 3, 4, 5 at a time, not looking to hit the big home runs. Sometimes you get lucky, like here, you maybe had 10, 20, almost 30 pips to be had. But that's not what we usually look for. Those, 2 to 5 pip trades. But you can see how you can make money doing this, but the question is whether or not you have those other skills that we alluded to do it. And it's got nothing to do with chart reading. It's got nothing to do with any of that stuff. It's just so simple. But that doesn't mean it's easy. And then most people, they want to put more indicators on the chart, and somehow they think that's going to help them. But as I've told you, talked about this on videos, once you put the trade on, all that stuff pretty much goes out the window. What you're doing now is managing the risk and managing the money. You can sit there and look at the chart and think it's going to do something, but if it doesn't do it, are you going to take that trade and either cut your loss or take your profit before the market takes it back? I mean, really, if you think about it, that's almost the essence of trading. You put a trade on, and then you either cut your loss or you take profit before the market takes it back. But not too many people really talk about it. They want to talk about MACDs and stochastics and which moving average is the best, and market structure and a whole bunch of other stuff. But when you sit here and you look at the chart, sometimes it just seems so simple when you say, wow, it bottomed out here. I would have just bought there. I could have ridden it the whole way. But the question is, could you? Because you see, it went up, it started coming back. Chances are, I know I would have been taking my profit off the table. I might have taken the profit before it even got to that line, depending on what it did. And then, of course, I'd kick myself. We say that it's like, oh man, I should have stayed in that trade. But see, that's part of the money management, because one of the things you can do is instead of going in with one full position, you can go in with 2 half positions and take half off and let the other half ride. Some people might take 80% off and let 20 ride. Or somebody might go in with 2 full positions and take one off and let the other one ride if they're very confident. So what all that means is that those are the skills that you have to master if you're going to be successful in trading. It's not so much reading the charts, it's not so much fancy indicators and all this other talk that other traders might want you to believe, so you'll buy their books or their systems or go to their seminars and listen to pay for their podcast or whatever. But this is just a straight scoop here. I made that video, all you need to trade, is horizontal lines, and it's pretty much true. So, fellow traders, I hope you had a fun, safe Halloween, and I hope you have a profitable day, week, and month. You have a new month, new week. And just remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So Go out there and drain the banks. This is TheRumpledOne, over and out.